Hello, everyone. Welcome back to the Mina Markets podcast. My name is Sofia Cruz, and here we break down trending financial topics with insights from the sharpest minds in the industry. Today, we have a super special guest, someone that a lot of people in the business school know, and it's Rodney Lake. Thanks for being with us today.
Thank you, Sophia. Great to be here.
Thank you, really. You are the right person to be with us this week because, oh my gosh, there's tons of things going on in the markets, lots of
Isn't
uncertainty.
it so exciting?
It's so
It's
exciting.
not boring. There's so much stuff going on.
There is. And especially, I wanted to get your take because you have worked with the GW Investment Institute, $9 million in student-managed investments and total assets. It's actually insane. Like, I really admire what you guys are doing.
Thank you. It's all the great work of our students. 2 million of the, it's almost 10 now. 2 million of the 10 is funds raised from alumni, and the other part is money made from students. And we've also paid out more than $2 million to support the Institute, and 300,000 of that is directly back to students.
Amazing. I really admire your work, actually.
Well, it's a lot of hard work from the Investment Institute team, Bojana Yankovic, Kathleen Hinman, and we have a great advisory board, and Russ and Norma Ramsey set this in motion nearly 20 years ago, or actually 20 years ago now, with the first initial gift of $1 million. But it takes really a team of people to do these sorts of things, and the Investment Institute Advisory Board is fantastic for that. And again, all the supporters along the way that contributed, $1 and $1 million, it all helps, it all makes a difference, but everybody believes in the mission and what we're doing. And of course, the great performance from our students.
Yeah, students' performance, yeah, their pitches and everything, yeah. And I'm glad to be talking with you today because here is a hot take on like what's going on with Meta and their new app. They're bringing out to the market a new app that's going to be a new rival for OpenAI and their ChatGPT 4.5.
4.5 is the latest model coming, correct?
Right. And I wanted to get your take on, do you think this is going to impact their stock price, or do you think it's already priced in?
I think that's challenging to know because I think the people that are using Llama 2, for example, are very much connected to, building out that world of AI and the open source piece of it. And I think that probably this, application that they're announcing or likely to use opens up a different market from that. So I think right now it might be difficult to know if it's priced in or not, because I think it's also difficult to know what's the monetization for that? I think obviously if you look at the valuations around OpenAI on the private market, these are big, very big numbers. The funds raised and the sort of anticipated market capitalization for the private company for OpenAI. So I think it's likely to be beneficial. Whether it's priced in or not, always tough to tell. However, if it really works and the uptake is significant, and look, they have an installed base, 3 billion users for Meta across the different platforms, Facebook and Instagram as an example, and WhatsApp. So they have this built-in community already, so that they have an audience for that. And if their models are competitive, which I think a lot of the models are making a lot of progress. So if you think about Meta obviously is a key player in Llama 2. And then if you think about the people that are using them on their phones, that's ChatGPT and now Grok 3. I don't know if you've used that. Grok 3 is very good now. And so that's xAI's platform, and Claude is also good. Gemini, I think, is definitely from Google is falling behind. But I think that them getting into the space of using this as an application-based setup, I think they have, again, an installed base. So it could drive value. In the short term, hard to know if it's priced in or not. I would think not right now. But I think it's just a little bit tough to tell because you also have to think, well, what's the monetization for that platform? And Meta makes most of their money from advertising. And so maybe it's another channel for them to advertise on, and that could be a great thing. That could increase, the time on one of their platforms, and so that could be useful. It could drive additional value. Hard to know. I would say it's probably not priced in at the moment, though.
Okay, that is a nice insight because if we look through different market movers, and I'd say it's definitely one of the biggest. It's AI, and it's undeniable the impact of AI in the market currently. So if companies are doing new investments such as Microsoft, Google, and currently Meta, like they're taking the capitalization of these new tools, I'd say, like that's really interesting. But when we talk about AI, we can't avoid to talk about Nvidia.
Of course.
Oh gosh, like I was really wondering, because here's the thing, Nvidia, they broadcasted
Yeah.
everything, and a lot of people were super interested in what's going on, really, and they said we have 39.3 billion in revenues.
Yeah.
But this is not showing in their stock price because this is 78% greater than their last year.
Right.
But this is not showing on their stock price. So what's going on?
Oh, look, NVIDIA is maybe the most watched company right now. And so there's a lot of pressure on, their earnings and anticipating that, they're going to be blowout every quarter now. Look, if you think back, and by the way, for the investment student, I've talked about NVIDIA on our podcast, Market News with Rodney Lake, to cross promote a little bit here. We've talked about NVIDIA, and we've done a whole episode on it. It's our largest holding at the Investment Institute, and so it's a very important position across a few of our portfolios. So we think about it quite a bit. Now, we were 2019 investors in NVIDIA, and so the returns have been quite good since that period. And I think if you step back and you take a longer term view of where they were and where they are now and where they're likely to go, I think that there's still quite a lot of upside from here as far as what value they can bring to their customers. And really, as an investor and as a business person, this is what we're always trying to train our students to think about. And we have a framework: business management, price valuation, and balance sheet. And when you think about NVIDIA's business, why are people, maybe a little bit more skeptical now? Because it's had such great returns in the recent past. And the growth has slowed down a little bit. And the gross margins, they're very high, but they were, 75+%, and then they were down to 71%. By any other standard, these are still fabulous gross margins.
They are fabulous.
Right. So everyone's, I think, is, really piecing it, apart, like what's going on here. Now, again, I think it's had a huge run. There's a lot of people that are interested. And, there can be all kinds of reasons why people might exit the stock, though. Now, you might have some people who are invested in NVIDIA. They don't really know the story beyond what's in the news, and they're along for the ride. And they felt like the DeepSeek news came out, and they felt, okay, maybe the wind's coming out of my sails. They sold maybe ahead of that. And also, when the earnings came out, they think, okay, well, this is kind of a stabilizing feature. It's good, but not as great as I want, and maybe I'm a net seller out of that position. Maybe it's also become a big part of somebody's portfolio, so they're trimming it as well. So there can be all kinds of reasons that people might be net sellers of NVIDIA on this earnings call. But I think I would say a lot of it, or at least part of it, it's hard to know a lot of it unless we really find out from everybody. A piece of it is that it's just had such a big run recently, and I think people are anticipating that it's going to be very challenging to grow as quickly as they have. To produce another 80% from this point. They're one of the largest companies, depending on the day, the largest market cap company in the world. The numbers are big numbers, and so they're not small numbers. Now, the other side of that is there are customers. If you look at the CapEx budget, we were just talking about Meta, even after the DeepSeek news, Meta raised their CapEx budget for another $10 billion. Likely a lot of that CapEx is going to go to NVIDIA to buy, Blackwell and maybe the next version of chips that are coming out from NVIDIA. So you could definitely find reasons to be optimistic. Amazon did something similar. And so these people are raising their CapEx budgets. And it looks like, if you think on the AI side, and Microsoft is something similar, that they're going to be net buyers of GPU chips, Blackwell, and the next versions that come out from NVIDIA. And so that would then make you optimistic about that. And even if those people, so the next level down is, if they can actually get the price down a little bit for some of these things, you have a whole nother level of customers that maybe are not going to buy, chips at 30,000, but if you can get chips at 5 and 10, maybe there's another layer of customers that are going to buy their own chips instead of, using one of the hyperscalers.
Exactly, because here's the thing. A lot of people are saying, what about TSMC? What about Intel? But we need to think, okay, when we're talking about NVIDIA, they have big customers. It's not something that's going to be changed within their contracts, and they're not going to be changed easily just because they say that there's new competition in the markets.
Correct. And so you mentioned TSMC, and they actually just did an announcement recently that $100 billion that's going to be put in the U.S. for the manufacturing for the fabrication of those chips domestically here in the U.S., which is a big deal, and they're making NVIDIA chips. And so, but you talk about the customers and the what Warren Buffett would call the moat around NVIDIA's business. The second place, AMD, they announced their earnings, and they really didn't make a lot of progress in the server market, at least not in the most recent quarter announcement. And so it looks like people are still looking to NVIDIA. And another part that I think, if you're less familiar with the company, and certainly I was before we got very interested in it, there's a software layer called CUDA that they have backwards integrated across all their chips over time, which makes them a software and hardware company with their own ecosystem. So then you maybe possibly think about NVIDIA more like an ecosystem that Apple has, where it's very difficult, as you mentioned, to get out of that. There is a cost to exit, to change your chips, to change that. There's a layer in there that you can customize through CUDA, and that's very beneficial if you're Meta, if you're AWS, if you're Microsoft. And you're going to want to use that. And if you've already spent time also in designing that the way that you wanted, and it's fully backwards integration, then the next version will have the same features that you can use and benefit from. And to switch to AMD, well, maybe it's cheaper, but are you going to get the same performance at the same price? Maybe not.
That is a great point, because these companies, I mean, they're not making, like when we're talking about Microsoft or different other companies, they're not making their living, let's say it like that. Let's put it into simple words. They're not making their living of like creating new inventions to create their own chips. They're not doing that. And I believe that the people are really concentrated on AI currently, but I also understand that these companies are going to be what is more cost effective for us. It's better to keep the one that we've had for a long time, right?
No, that's an excellent point. And I would add in, actually, to your point about, some of these other companies, they are actually starting to build some of their own chips. But to your point, even if they start to build some of their own chips, how much of that is going to be an actual substitute at scale for all of their needs? Now, they might do it, and Apple has done that certainly with their A series of chips as an example, not specific to replacing NVIDIA. But you're definitely seeing companies think about how they can design some of their own chips to have at least some competition to NVIDIA. Now, whether that then replaces, to your point, all of these chips, I would say at least in the immediate and medium term, that seems very challenging.
Okay, yeah. And I heard before you said that you have a big portions of NVIDIA investments. And I think I saw on your Philips and on your Ramsey portfolios, you have big holdings on NVIDIA. And I was thinking, how do you guys react to these news like TSMC saying that they're bringing tons of investment here to the US? How do you guys react to that? What I'm understanding is that you still have a big confidence on NVIDIA still.
Yeah, so we own 3 of our 4 portfolios, so Ramsey, Philips, and actually in the quant fund as well, we own NVIDIA in sizable positions, Ramsey being the highest, then Philips, and then the quant. So this is something that we, as risk management, so we're responsible, me and the team for the Investment Institute are also responsible for the portfolios, every day. Our students make the recommendations during the semesters, and we execute those trades depending on how it all turns out. But we're responsible for risk management. We're responsible, ultimately as the fiduciaries. And so we think about this on a very consistent basis, really every day right now, because NVIDIA has become such an important position. We still have a lot of confidence in NVIDIA at the moment for the reasons that I've mentioned. In the short term, the market can always pull back. And right now we're having a market pullback, and that's pretty normal. And Peter Lynch, One Up on Wall Street is a book that we recommend in class. And, you can find clips of him. He ran the Magellan Fund at Fidelity for a long time and had a great track record. But you can find clips of him online saying, the market's going to pull back 10%. Sometimes it's going to pull back 20%. As an investor, you have to be ready for that. And you have to know what you want to do. And really understanding, and this gets into the Warren Buffett circle of competence, you want to make sure you understand your companies and that are in your portfolio. NVIDIA, of course, there's always more to understand. We're not designing GPUs. We're business people, we're investors, and that's what we're training people to do at the Investment Institute. But I think we have the know-how to sit down and try to figure out, how does this business work? So the things that you were talking about, where's the competition? Where are they placed? Those things we can figure out. And I think, and you can see that through what people are doing, and you can see that through the CapEx budgets. So you're not only looking at Nvidia, you're looking at their customers. And this is something, Phil Fisher, pioneered. Common Stocks and Uncommon Profits is a book we also recommend. You look at who are buying these products. What are they using those for? What's the demand look like? What's the balance sheet for those companies? So if we talked about the hyperscalers that are the customers, like Meta, like Microsoft, like Amazon. These people have a lot of cash.
They do.
And you can find that because they're publicly traded companies, and you can look on their balance sheet. And none of them, at least by our estimation, want to lose this AI race. And so the idea that they're going to slow down seems less likely. And if you look at the CapEx budgets, that's what also gives confidence, because we think that they're going to continue to spend more money. And possibly there are going to be ways to be more efficient. And I think DeepSeek was a big heads up for everybody. Maybe there's going to be different ways to be more efficient. But the other side of that coin is, well, maybe there's just going to be a lot more use cases to use AI then. So yes, it's more efficient, but the pie continues to grow. So the amount of compute needed still keeps growing.
Yeah, that's amazing insight, because here's the thing. It's like wrapping it all up, like it's Nvidia is depending on these different factors, right? But also big market shifter is AI. And it's sometimes when you listen to the news, like really dramatic news, oh, the stock's down, everything's going down, you need to exit the trade. But I feel like those are just like so dramatic. It's good to listen to people like you who have money in big portfolios, who sit down, who look at the CapEx, different statements, who actually go through the numbers. It's not you and you said, oh, this is going down, it's bad. No, it's good to listen to people like you. So thank you so much, really.
Of course.
And I'm going to wrap it up right here. I wish we could be talking more on it, but due to your time, I mean, we have to. But thank you so much for taking your time today and talk about this with us.
Of course, Sophia. Thank you very much.
Thank you. And for you, if you're still listening to us, thank you for staying. And huge shout out to Katie and Tanish for making this podcast possible. And thank you really for making this time today to spend with us. And I'll see you next time.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.